Hello traders, I'd like to show you the intimidating tactic that I found in the price action today. Actually, I found it several times, so I'd like to record a little video explaining what I mean and how to tackle it. So basically it's a 34B trade. It's a bounce from 34 EMA, which is this gold line. We're looking for a bounce, right? But with intimidating tactic is it happens when usually we expect if the prices go up, if it decides to go down to the dynamic support and resistance zone, which is this 34 EMA, if it decides to go down there, it'll go in a clean fashion. It'll go straight down, maybe like it did here or like it did right here, straight fashion. You see there is no coiling, no wicks, no nothing. It just went there, and that would be nice. But sometimes it goes in weird ways, and it's intimidating. And it's intimidating because it creates these wicks. For example, if you think about it, if we are on this bar, we are thinking prices actually decides rejecting this 34 EMA and decides to go up, but actually it reverses. It goes back here. And so while the price is here, we're thinking, hey, market is rejecting these highs, it's going down. So when the price comes down here to the 34 EMA, to the 34 EMA, and makes this bar, reversal bar, we're thinking, since price rejected these levels, it's probably going to reject these levels too, or here, because it did it once here. It's probably going to do it again here. Unlike here, you don't see this history. Price went down and there was no rejection on the way down. But here you're thinking, well, it'll be difficult to get up here. So it's intimidating to the trader. So normally we would, technically this would be a 34B trade, but because of these wicks and this wick, it probably should be like this. Because of this series of wicks and it close in there, we expect price to come back to 34 EMA at least. So that's so instead of opening your order with buy close, while this bar is forming, you would hit buy close if you would be expecting 34B, and you would be here. But because of these wicks, because of this intimidating price action, I suggest you wait until bar closes and then hit EMA buy. That way, you're betting that price, because of these wicks and because of this this trend line, you're betting that the price will try to revisit 34 EMA. So you are entering with EMA buy. Look, if you would have entered with 34B, it would have failed you, right? But because of this intimidation here. But if you would enter with EMA buy, you wouldn't enter here, price would come back here to 34 EMA, it would trigger your price here. It would, take a little bit lower, and then you would win. So this happened in the morning, like 8 a.m. on December 16, and we had several of them. So let me show you a little bit more. Here is another intimidating factor. Of course, this is like a double top here, but I was actually watching this, and I actually played it out, and it worked out well. So again, we're seeing these wicks. It's intimidating us. We made this lower low, and we made a good signal bar. However, because of this invisible trend line here, I call it invisible because we don't have time to draw them while we trade. So they're invisible, but you just connect those dots with those, you connect the line with those wicks. You make this trend line. So again, you wouldn't want to enter here because of this intimidating price action. You would wait till bar closes, hit EMA buy, it went down here, then it tried to go a little bit higher than the previously went, and then reversed. You would, if you would have entered on your EMA here, your profit would be here, and you would have won. So that's that's number 2. We had some more. We had news at 9:45. Look, and look here. So this is look at this. How price goes down, but it wicks out here. It wicks out here, and if you put a line in there, and you have this signal bar, consider, even though it's not like a super great signal bar because it closed not far above EMA, but nevertheless, you see this trend line, it closes higher, and you're banking, because of this intimidating factor, you're banking that it will probably revisit the 34 EMA. So if you would have waited, you would still win in this trade if you would have opened 34 buy, buy close for this 34B trade. But you also would bank that price will revisit 34 EMA. So if you would have hit EMA buy, price would come down here, get your price level, and close right here on the same bar. Let me show again. Like, I had a good amount of examples of this intimidation tactic today. So this is after the news. We have this two-legged pullback, but it's still intimidating. You're thinking about price rejecting these levels, price rejecting these levels. Will it reject here as well? So if you draw this channel, if you would have waited and did not enter with buy close, but you would enter with EMA buy, you would have saved yourself a little bit of ticks, and it would have won. But it would have won anyway because of this price action. So there was another one after the news also. Again, it's on the same day. Look at here. It's intimidating that it goes the way it goes down. So when you see this bar, it's a good bar. It made a lower low, It has a good wick size. It closed above 34 EMA, although by not much. So you would have entered here with a buy close, but you would have lost, you know. So when you have this wick, you may consider to tackle this with a EMA buy, or you may even wait to retrace even longer, like in this case. If you would have entered at EMA, probably would have saved you, maybe not, but I'm just showing you that these wicks, they are important, and to determine how we trade. And also this one here. See, it goes down. We have a reversal bar. Do you want to enter into this trend line? No. But you may wait, you may hit EMA buy till price comes down to the 34 EMA again. It'll attempt to bounce again. That's where your take profit would be. So you would have won on this trade. And when you have this big wicks, that's intimidating, you know. So I just take it for your consideration. That's how you enter. You would enter with EMA buy on a bounce trader. And again, if you don't know what the bounce trader is, it's a add-on, enhanced add-on to the chart trader that we use for bounce method. So it's available. We have a 50% discount right now, and you can download free trial, 15 days free trial, and see it for yourself. So hopefully that was informative to you, and yeah, think of this intimidating factor and intimidating tactic to trade your 34 Bs. Thanks. Bye.